All right. Joining me is Miller Whitehouse-Levine, founder and CEO of Solana Policy Institute, which is a nonprofit devoted for advocating for public policies that support the growth of blockchain networks like Solana. So that obviously includes advocating for proposed legislation such as the Clarity Act, which is where we will be focusing our conversation. And I'll tell you, Miller is someone who has been working in crypto public policy for quite a while now. So prior to starting Solana Policy Institute, he was CEO of DeFi Education Fund. That's a nonpartisan, nonprofit advocacy organization promoting decentralized finance. Prior to that, he was director of policy at the Blockchain Association. So again, a lot of experience in this space. And so, Miller, thank you for joining me. Great having you on the podcast.
Thank you for having me. Looking forward to it.
All right. So, as I noted, we are going to go fairly in depth on the Clarity Act and everything surrounding that, which I can't wait to hear your various takes here. But I thought to set the appropriate backdrop, let's start with Solana Policy Institute and the work you're doing here. I guess first, why did you originally start this organization? And then talk more about what exactly you do.
Sure. Happy to. Thanks again for having me. So, you get my background in the crypto policy space, and that background eventually led to creating the Solana Policy Institute. So, I'll start there. When I started working in crypto policy in DC, there were about a half dozen people working on this issue. And, it was a very small subset of issues because everyone was, on the same page when there are six people. And over time, there's been a need in my view, for additional organizations that have developed as the industry and the industry's engagement in DC has matured. So, for example, if you think about traditional financial services, you have everything from banks to securities brokers, and it's a vast set of issues that don't necessarily overlap. And the same is true in crypto. So, about a year and a half ago, my colleagues and I were kind of looking at the landscape, and in our view, there was quite a strong presence for investors in DC in crypto, a very strong presence for exchanges, centralized exchanges like Coinbase, like Kraken. And there wasn't enough of a voice for folks actually building on chain and building crypto projects themselves. And the Solana ecosystem agreed with that assessment and decided to invest in building that voice in DC via SBI. So that's how we originally decided to create the organization, and it's made a thousand flowers bloom. There's a lot more today than there was even last March. So the growth in the industry's investment in DC has been immense over the last decade, and I think it fits into that broader story.
All right, so you do now have this growing voice, and we talked about your background in crypto public policy. Before we get into the Clarity Act, I have to ask you something that I ask all of my guests, which is, what is your crypto origin story? Like, how did this all become a passion for you to begin with?
Yes, it's an excellent question, and it's a bit of a weird answer. So, in high school, I was living in China, and in Beijing at the time. It was very early days in Bitcoin, and being an expat out there, you often hang out with other expats, and the Beijing expat community was really into this new thing called Bitcoin. So I started reading about it and became fascinated by it. And at the time, living in China is quite a different experience than living in the United States, and you feel those differences. And I saw Bitcoin at the same time as a way to use technology to empower individuals over centralized actors, be that businesses or states, and wanted to work on broadening the adoption and success of that vision. So that's how I got into it originally. And at the time, there wasn't really people working in crypto, especially non-technical people like myself. But when I eventually got into it full time, 2017, Ethereum had launched. There was a lot more opportunity for non-technical folks to participate, and married my professional interests with my personal interests, and long may it continue.
I love that. So it all started with Bitcoin and then expanded from there.
That's right. And it was like, at the time, it was like Bitcoin, Litecoin, and Doge. So it was quite a different world back in 2012, 2013.
Okay, so with all of that as a backdrop, let's now talk about the Clarity Act. And Miller, I'm guessing the vast majority of people listening to or watching this, they're already at least somewhat aware of what's going on with the Clarity Act. But I always like to cover the basics on here because we do always have new people dipping their toe into crypto, as you know, and people trying to get up to speed on the space. And so, if you don't mind, let's start by having you briefly explain what the Clarity Act is. Like, how do you like to describe this?
Sure. So I think I'll start with like the two, in my view, core problems that the bill is trying to solve. And the first is to build and invest long term in any industry or in any sector. You need legal certainty or some certainty as to what the laws governing that space are going to be. And crypto has not enjoyed that consistency over its existence over the last 17 years. And that challenges people's ability to dedicate their lives to building crypto projects, investing in them, because you don't know if, for all intents and purposes, the government or regulators are going to rug pull you on uh, current public policy in a way that will make your business and investment unviable. So that's kind of the first step. Like, how do we bring some sanity to token-based fundraising, and what disclosures are going to be required around that, so we can have long-term, durable public policy, such that people have certainty and can operate with that certainty as a backdrop. The second is, major crypto secondary market businesses like exchanges, like brokers, like custodians have not had a federal regulator in the United States and are not regulated for the activities they are really engaged in. Like, since the 20s and the 30s, we've regulated secondary market trading of futures and of securities, and it's time to regulate secondary markets of crypto assets in the United States. The CFTC, the federal government, has never done that, and so Congress has to give them the authority to do so. But on that side of the equation, it's about protecting consumers, ensuring another FTX doesn't happen, to the extent, an exchange or something like that goes bankrupt, that customer assets are protected. And on that side of the market, again, bring some sanity to it all. So those are kind of the two problems the bill is trying to do. And I would say the three ways that the bill does that kind of falls into three buckets, excuse me. The first is a disclosure regime for token-based fundraising. So if you want to use tokens to raise funds, which has happened in many different ways over the last decade in crypto, there will be a regime at the SEC that will require you to do disclosures to customers on a biannual basis, audited financials, management team information, all of that, for the privilege of raising money from the public in the United States. So bringing certainty to that issue. The second is the secondary market regulation, which I already dove into a bit. And then the third, which is probably the most interesting, perhaps for listeners of this podcast, that the bill newly does in its current iteration, is it includes a lot of explicit authority for traditional financial institutions, be they banks or securities intermediaries, futures businesses, to participate in the blockchain ecosystem. That's particularly important for banks because they are extremely regulated and really can't do anything without sign off priori from their regulators. So the bill includes a lot of provisions that would allow banks to, and financial institutions more broadly, to use public blockchains to engage in the activities they're already engaged in, which is, quite, I think, an exciting opportunity for them. So overall, that's kind of the three broad buckets of what the Clarity Act does, and it was a long-winded answer. So happy to dive into any aspect.
No, I think that's a fantastic overview. Let me ask you this. So you've again been in the crypto space for a while now, and I know you've heard, I have as well, from some corners, I would say, of both TradFi and DeFi, this cliche trope that crypto was meant to exist outside the system, right? It's supposed to be decentralized. It doesn't need intermediaries. It wasn't built to need the involvement of politicians and regulators. And so there's this question of why do we want to regulate it? Why do we need the Clarity Act? And I think you just hit on the main prongs there. But how do you view just that higher level discussion? Because I know you've heard that where people go, where crypto got its starts from.
Yeah.
It was sort of outside the system. I'm just curious, how do you respond to that line of thinking?
Yeah, and I will say it's been a conversation that's evolved over the last decade. I would say in 2018, that line of thinking was much stronger than it is today. But I think you're absolutely right. Crypto is about eliminating intermediaries and centralized sources of power. And here I am working with the U.S. government, which is like the biggest, baddest centralized actor in human history. So it is, I think, a bit of a philosophical tension there. I think there are kind of two trains of thought that have developed in crypto on that front. My view since I got into crypto policy was there was no way for crypto to do all it could do for accomplish the vision of bringing financial services to anyone with an internet connection without some semblance of acceptance by sovereigns around the world, be that the U.S. government or others. They have too much ability to pump the brakes on the development of any technology to not try and obtain, at least their tacit consent, if not vocal support for the technology. So I would say that's like the positive view of the question. For skeptics, I think there's the cliche that you can ignore politics, but politics won't ignore you, and that certainly played out over the Biden administration and the Gary Gensler regime. All these folks in crypto who didn't want to deal with the government or didn't think it was worth investing in engaging the government. There was a big kick in the teeth for us all over the course of 21 to 2025. And I think, there was rightly a reaction to that because it was not a sustainable situation for the industry or ecosystem in the United States. So I think there's both the positive and negative that has kind of diminished the adherence to what was a really powerful view back in the 2010s.
No, I think you hit the nail on the head. I think anybody simply needs to look back to the regulation by enforcement, the regime that you were talking about. And I think we would both agree there's always a balance between innovation and protecting end investors. And there should always be a balance there. But that balance became way out of whack to where innovation was snuffed out the minute it got started. And so that's why, as I sit here, that's how I would answer the question as well. That's why we need this framework in place, that we do need rules of the road so we can foster innovation. People know what they can bring to the table. So I thought that was perfect. Okay, so where does the Clarity Act stand at the moment? And before you answer that, I really mean at the moment, because the headlines seem to change by the minute. And so if people listen to this a day from now or a week from now, maybe this has all changed. But as we sit here today, what is the latest? Where does it stand?
Yeah, you're absolutely right, Nate. Things are developing faster and faster. One of my colleagues likes to say, with legislation or major legislation like this, you start with having good months and bad months, then you have good weeks and bad weeks, then you have good days and bad days. And we're definitely in the good hours and bad hours stage of the Clarity Act because it is developing on what seems like an hourly basis. But where it currently stands is it is both portions of the bill. It is split between two committees of jurisdiction, but both the Agriculture Committee has passed their version out of committee several months ago in January. The Senate Banking Committee passed theirs out in May. And the two portions of those bills have now been married up and published for public review last week. So we're approaching endgame. I think the current thinking is there will be some vote in the Senate on this bill next week. That could change, later this afternoon. So stay tuned. But where we are is right on the brink. This bill alone has passed the House 13 months ago now. And the first market structure legislation I worked on was way back in 2018. So a lot of thinking over the last 8 years has gone into this bill. And we're on the precipice of the first Senate floor vote on crypto market structure legislation. So there are a few issues that remain to be worked out, which I'm sure we will discuss here. But at least from a process perspective, that's where everything stands at the moment.
Well, let's actually talk about those issues because,
Mm.
from my perspective, it seems like the biggest sticking points for the senators who are currently opposed to this are ethics, right? Ethics seems to be at the top of the list. And then I think there are also some concerns around who is considered a money transmitter,
Mhm.
the BRCA. Those seem to be the biggest hurdles to me at the moment. Would you agree with that? And any additional color or context you would add?
Yep, those two are correct. I would add a third, which is some portions of the spot market regulatory framework for centralized exchanges are still under debate. The question really being what lines of business can be housed within the same entity. So when you think about TradFi or traditional financial markets, for example, the securities markets, you have the New York Stock Exchange as a separate business from your broker, as a separate business from your custodian, and as a separate category from dealers. Like none of those functions are housed within the same corporate entities in traditional financial markets. That's not the true in crypto. The big exchanges do all four of those activities, and I think there are outstanding questions as to what middle ground between the status quo and traditional, breaking up of those businesses can be found. On ethics, it's no secret that the president has been highly active in crypto over the last 18 months. And, I think there are many centrist Republicans in the Senate and Senate Democrats who would like to see that reined in some way for all federal officials. But, with the president in mind, given some of the figures that have been coming out of his financial disclosures. And then on the BRCA, you're exactly right. It's, what activities constitute money transmission and which don't. And that's kind of a central question because it gets at this whole question of decentralization and lack of control over a network and the relevance of that question for regulatory obligations. So it's a question that flows throughout the entire bill, but this one little portion remains a sticking point between particularly folks who are champions of prosecutors, and prosecutors naturally want as much discretion as possible. And on the other side, crypto developers who would like to know whether they have money transmission obligations or not before they get a criminal complaint filed against them. So that is I would say, an overview of the three major outstanding issues.
In terms of the ethics language, because I think you're right, given some of the president's activities in the crypto space, there's been a bigger spotlight that is being shined on this area. Do you have any sense as to what specifically some of the holdout Democrats and a handful of Republicans want to see regarding the ethics language? And do you think that's fair? Because I've seen the
Um,
draft of the language that's in there. Do you have any sense as to what else they would like to see in there?
yeah, so I would say the two major issues that these folks have with the draft that came out last week are the enforcement mechanism, number one, and the sunset of the authority in January 2029. So those two issues, I think, are the center of the negotiations. On enforcement, Senate Democrats in particular don't trust that Todd Blanche or Trump's DOJ are going to faithfully enforce this law to the extent the president is not abiding by it while the president is in office. I think that's a fair concern, and I think the rub is that the president's the president, and federal law is enforced by the president. That's a constitutional structure that has always been and isn't going to be undone in the next 2 weeks to get this bill done. So one idea that the Senate Democrats have advocated for is allowing state attorneys general to sue the president or federal officials who don't abide by these ethics obligations. And that's constitutionally difficult because state attorneys general don't enforce federal law or have not historically in the United States. So there's like all these weird constitutional questions that a lot of these ideas raise, similar to trying to capture or include the immediate family of federally elected officials in the ethics provision. All of these issues get, very macro, very constitutional very quickly. And so I think that's one of the issues that they've been trying to hash out. The second's on the sunset provision. So right now, or the draft released last week, the provision would sunset January 20th, 2029, which is the day of the next inauguration. And I think Senate Democrats read that sunset provision to be designed to prevent any future administration from potentially enforcing past violations of this provision in the future. So that those are kind of the two areas or have been the two areas of debate.
What do you make of the fact that despite some of those areas of debate or concern around the current bill, and we know there are a number of Democrats and a handful of Republicans still holding out on this, there's actually been a lot of support voiced from various organizations, including major asset managers such as BlackRock, Fidelity, Charles Schwab. We saw Goldman Sachs, Franklin Templeton. You're talking a who's who in the asset management space, all indicating their support for this current version of the Clarity Act. I'm just curious, what message do you take from that?
Yeah, well, I would say, folks in the crypto industry, and I think certainly most of the folks you just mentioned, have rightly tried to stay out of this whole ethics conversation because it is a bit of a debate between two branches of government and, well outside my expertise. There are people that do this for a living, and there are ethics committees in Congress. So I think, there's not been a keen interest in anyone in industry getting involved in that conversation from, either industry side or Congress's side. And, what I'm hoping for is a deal on this, because I think it would be a real shame for this issue to kill, the rest of the bill, which I think has massive benefits. And to your point, I think many folks in TradFi increasingly agree with that view. I think it's reflective of the fact that the bill is good for them. I think many of these firms have spent the last 10 years watching crypto and experimenting with crypto and public blockchains. But to really use them at scale or to adopt them in their internal workflows and businesses, they need the legal certainty that we talked about at the top. If you're a massive asset manager, are you really going to invest $100 million in building out your business around this technology if in 2029, the public policy and regulatory environment could completely 180 and moot your entire investment and give you a massive opportunity cost at the same time? So for the same reasons we like it, I think and TradFi likes it too, which is it gives them the certainty they need to actually take advantage of these new technologies.
Yeah, and I think it's this thought that, again, even if the current version of the Clarity Act, even if it's not perfect, it's obviously way better than what we currently have. And I think that's the
Right,
way
which is nothing.
a lot of these
Like right now,
organizations.
we have
Exactly.
no regulatory framework for any of this. It's like total chaos. So, I think my hope is that we can put some sort of framework in place because, historically, Congress has regulated or legislated around these issues after massive crises. And I think getting ahead of that would be very prudent.
I know with what you do, obviously you have to straddle the political line. So I don't want to put you in any sort of position where you're having to offer up any political view. So let me try to ask this in a manner that will have you avoid that. If we go back to some of the current holdouts in the Senate, do you think they're taking political risk by not supporting the Clarity Act, because we do have midterm elections coming up. And then obviously a couple of years after that, we'll have the usual presidential election cycle. Like, how big of an impact do you think the Clarity Act could have on voting decisions in some of these races? Because we know an increasing number of the country owns crypto and they care about this. So I'm just curious if you think there could be real impact there depending upon who does and doesn't support Clarity.
I think so. And I know it seems like an odd thing to say, but it's downstream of the fact that many of these Senate races are going to be decided by probably less than 50,000 votes in many of the states where there's Senate elections. And that's all the more true for House races. And so to the extent, there are 10,000 crypto voters in California, which I imagine there aren't, that could be a determinative vote. I suppose California is a terrible example because I don't think either of their senators are up for re-election. I could be wrong, but take a swing state, Texas or something. 10,000 votes could matter a lot, and I think there is an active a political cohort that do care about these issues. Crypto's gotten pretty sophisticated on the political front because we've had to, and so Stand with Crypto is a grassroots advocacy org in crypto that has 3 million folks signed up across the United States, which is, far more than 10,000 votes. So I do think there is a political upside for several reasons. Like, if I were a Dem, I would take the win on reining in the president with an ethics provision. I think folks are quite sick of hearing about this issue in Washington and would like to see Washington move on to something else. Half of Congress's financial services staff has spent the last 18 months working on this bill. And I think it would be, there's a desire to not see all of that time and energy all for naught. And I think third, I do think it's even from a moral perspective in a way, quite prudent to get ahead of potential crises. And we've already had a big one in crypto with FTX. I think it would be a real shame to wait for another one before legislating on this issue when we could do so now. So that last one's not so political, but I do think it matters.
Okay, so I'm going to put you on the spot now. What's your expectation on how this all plays out? We talked earlier, there is this window here over, say, the next week and a half. And then I think there's a small window in September for the Senate, but then you get into election season when you get into October and obviously November. And so it does seem like there's, again, a limited window to get this done. What's your expectation?
Yeah, we really need to see movement next week because, the Senate comes back September 14th. And so to your point, that's pretty far into election season. And, politics is already, is not on legislation's side ever, but particularly in this instance. So I wish I had a better answer for you. I have no idea what's going to happen at this point. It's been a crazy couple of days, but it feels like today we have some momentum again. And I think we've got to see at least a vote on bringing the bill up for consideration in the Senate next week. Whether or not they can pass it out of the Senate completely next week is an open question just due to the tight timeline. But I think, to the extent they can open up the matter, start considering it next week, and, potentially come back to it in September. It's not an ideal outcome, but it is what it is because, here we are, July 30th. So I think there's a narrow window, but a real chance. I think, it's really up to how motivated senators in both parties and the president are to see this get done.
And you were alluding to this earlier, but just for clarity, no pun intended there. Let's assume the Clarity Act does not pass. You're well aware the SEC and the CFTC, they've messaged that they're committed to creating a framework for crypto. They've already been doing that, but they've messaged they're not going to stop, right? Which is obviously better than nothing. But just so people understand, the issue with that is that if you get another administration that comes in that disagrees with some of the framework that they're building, they can undo it all. That's why you need the clarity, right? I just want to.
That's exactly right.
Clarify that.
That's so the durability of the policies is what gives the certainty to businesses and innovators. So yeah, the durability on that side is the major benefit. On the spot market regulatory side, the CFTC can't do that. The Congress has never given them authority to regulate commodity markets ever. And so, the SEC can use a lot of their existing authorities around token-based fundraising and RWA trading on chain and things like that. For commodity spot trading and the consumer protection core of that part of the bill, Congress has to act. So it's more durable policy on the one hand, and actually granting the federal government the ability to regulate crypto markets on the other.
Okay, so that's on the negative side. If it does not pass, let's assume Clarity Act does pass. My question for you at Solana Policy Institute, what comes next for Solana and DeFi? Does the building across these ecosystems accelerate from there? Or is there still other work that needs to be done, whether from a regulatory perspective or otherwise? Like, what does life look like after Clarity?
Yeah, I think it would be a massive explosion of activity, not just on Solana, but other public blockchains, because there are all of these institutions waiting in the wings. And I think there's a lot of fatigue downstream of the swings in public policy that are keeping people on the sidelines, and legislation would end that uncertainty. So I think it would just be a massive explosion of activity and innovation and investment in the space. I think consumers would have far more trust in the ecosystem with the disclosure obligations and secondary market protections that the bill would offer. So I think it would be, just a catalyst for really everything. Everyone's building on chain and thinking about building on chain, and I think for that reason it would be quite exciting. There is other stuff to be done, obviously, like tax policy is on the docket, and there will always be something to do. If Clarity passes, the bill mandates 60 plus rulemakings from various federal agencies, which is about a decade of work to be done. So my colleagues and I were joking, like, if the bill gets done, it'll be so awesome, but our jobs will become a lot more boring because implementation is nitty gritty detail, legal work. But that's what we're here to do.
All right. And then lastly, before I let you go, real quick, just give us a little state of the union for Solana. So while all of this has been going on with the Clarity Act, obviously that hasn't stopped the current building taking place in the Solana ecosystem. So just at a high level, what is the current state of play in that Solana ecosystem?
Yeah, it's interesting. The markets are doing not well, as I'm sure your listeners know, but everything else seems to be going very well, especially, the network's health in of itself and what folks are doing on chain. I think an example of, the potential activity that this bill could unleash is stablecoin. So, I think stablecoin volume and transactions have 10x on Solana since the Genius Act passed last summer. And I think that's, downstream of the certainty that the Genius Act provided for that sector of the industry. RWAs are, I think, volumes are highest on Solana versus any other chain. And this bill would provide or mandate that these agencies create a framework for the trading of equities and futures, et cetera, on chain. So I feel like, a lot of folks are trying to, get ahead of what the legislation is going to do. And I think, our hope is that the bill will let them do that with certainty and, with sanity.
Well, Miller, this has been absolutely fantastic. I've greatly enjoyed the conversation here. Let's both keep our fingers crossed on the Clarity Act over the short term. Thank you very much for joining me.
Thank you. Appreciate your time.
That was Miller Whitehouse-Levine, founder and CEO of Solana Policy Institute. Hope you enjoyed this episode of Crypto Prime. As always, you can stay up to date on all of my latest guests by visiting CryptoPrimePodcast.com. See you again next time.
Crypto Prime is hosted by Nate Geraci, president of OTR Media LLC. Nate is also president of investment advisory firm Nova Diaz Wealth Management. While OTR Media and Nova Diaz are related by common ownership, they are separate and distinct entities, and anything discussed on this program should not be construed as an official statement by Nova Diaz. Some guests appearing on this program may also be financial sponsors of Crypto Prime. This program is for informational purposes only and does not constitute investment advice. Investing in crypto assets involves substantial risk, including the possible loss of principal. Any past performance figures discussed are not necessarily indicative of future results. Visit CryptoPrimePodcast.com for more information.